So yeah, I'm bearish on this, bro. For me, I'm not touching this right now. I want to sell. And if I want to buy, I want to sell. If I want to buy, I need to see some clear type of.
Welcome to Trader Versus episode 2. Today we welcome Alwyn, a close personal friend of mine and a trader who I have taught to trade years ago. Today with us, he's going to do his analysis on EURUSD. I will follow after he has completed on the same exact pair. Remember folks, the goal isn't to see who is right or wrong, as we can both be right or we can both be wrong. It is to display different styles of trading from traders all over the world. So sit back, relax and enjoy. Subscribe to make sure you don't ever miss the next episode, as again I said I do have a few guests lined up. Comment any questions you have for either Alwyn or myself, and like the video if you got any value from it at all. Let us begin. Alright guys, welcome. So we have here today on the second episode of Trader Versus a close personal friend, previous student of mine, and a very, very good trader as far as I know. He is here today. His name is Alwyn Coleman. Alwyn, welcome to the show. How are you doing today?
I'm doing brilliant, brother. Thanks for having me. Been a minute since we made some content, and I'm glad to mix it up and try something new. So let's go. How you doing?
I'm good. Absolutely. So you said you would be trading your USD today or analyzing it at the very least, right?
Yes, sir. Well, ChatGPT picked it for us. Brandon, he's letting us pick the pair, but I thought it would be, I didn't want to buy it. So I went to ChatGPT, use a little AI, and they picked EURUSD for us. So let's have some fun. This is fun for me.
Absolutely. So once he's finished with EURUSD, I will also analyze it afterwards. And then we end there. So Alwyn, take it away. Let's go.
All right, let's go. So I got to preface this by saying I am a student of Brandon. So a lot of the things like momentum, they're ingrained in me. Now, I ran with it for the past couple years now. So I've kind of found my own style. But so many of those founding elements that Brandon kind of put me up on still permeating my trading. But yeah, let's kind of see where I'm at now, where Brandon has been, and let's dive in. So already on a daily, I'm looking at a bearish EURUSD. It was bullish for quite some time, but it looks like since the beginning of May. So for like the last month, we've been bearish. So already off top, I do think we may come back up here because there's liquidity, right? I see liquidity down here as well. So kind of in a middle place. Now, like I said, for the past month here, we've been bearish. So basically I'm looking for sales. Like literally looking at this, I see one bullish day, which is really just a pullback, another bullish day, which is part of this 2-day pullback, and then 2 days of pullback last week, which were cleared out today. So off top, I'm looking for sales until something tells me otherwise. All right, I'm not trying to snipe something and catch a reversal, anything like that. But with that said, I'm not actually trading the daily. I just need my bias in a kind of overall direction. I'm really going to be trading the 1 hour and using the 15 minute to kind of catch that momentum in the intraday. So
right.
Let's go ahead and drop down to the 4 hour. Just kind of look at structure. I don't need any trend lines or traps anymore. In my analysis, it's kind of in my head, but like a lot of the new traders do these days, I do look for those, what do they like to call them? Can't even think of the term, liquidity. Yeah, or, I can't even think of the term, so. That's driving me crazy now. But yeah, anyway, so I'm just kind of looking at pullbacks here. Okay, let's see. Let's go down to the 1 hour.
Right?
Yeah. Super trending down. Very clean. We kind of just want to look for what we're going to see that kind of predict what's going to happen next here for the week, would you say? Yo, can you hear me?
Yeah.
Okay. So kind of just predict what we're kind of seeing for the upcoming week.
Yeah.
Now. Okay.
Yeah.
Cool. Okay. So yeah, we're kind of accumulating here. I don't want to touch nothing yet. Clean liquidity down here though. I think they're gonna come there. So yeah, I'm bearish on this, bro. For me, I'm not touching this right now. I want to sell. And if I want to buy, I want to sell. If I want to buy, I need to see some clear type of, hang on 1 second. Something really clear where, it stops out lows and then we have a sign of reversal or something like that. But until something like that, I'm just still looking for sells. But right now it does look like we're still trapped in liquidity. But seeing where price came today, right, to where they're still building liquidity to the low. So for me, what I would like to see for me to take a trade like this would be something where we make some type of, high. It doesn't necessarily, it would be super clean if it goes past here, pull back. Then I look to get in, how I don't know if you still do, but how you taught me, ECR 15 minute. Something in this area. So it's all the same stuff we've been doing that you put me up on. But that's one possibility. Keep in mind, this is all sells. So
indeed.
But I don't always get that. But maybe we get something like, get a little 9 meter. So maybe, we have a daily high made, and then the next day we see that daily high respected, and we get bearish momentum. I would look to sell. And with that said, I could look to sell to these lows, if anything. Now, I'm just going to do the last possibility because I'm still bearish biased, but the reason I'm giving the different possibilities because a lot of times you try to predict the market's going to go to this order block or, supply zone. That's the term they like, this supply zone.
Right.
So I try not to predict, how we say, be more reactive, right? Absolutely. So another possibility is it might just break these lows and I don't want to miss the train. So if it does, I could look to get in after it comes back. Like I said, I could always, if it comes back, yeah, for sure. And like I said, there's always an option. It does that in reverses, but that's just part of the game. So with that said, I'm super bearish on this until it shows me otherwise. But this liquidity is reason to pause this little buildup. I want to see how price reacts off these daily highs.
Interesting. All right.
Okay, I think that is it. I think that's it. I'll give you the mic.
Sure.
Beautiful. I see you.
Excellent. So on my EURUSD, I will start very similar, but I'm going to make sure that my bias should be bearish. So I'm not stopping on the daily. So on the daily, if I zoom out all the way, we have a few things highlighted that I can highlight here. We have consolidation here. We have a push up, we have a push down, we have a push back up, we have a really far push down, and this would have broken, right? So now we can see that this most recent low here would have been broken, and it went bearish after that, but it came right back above. So this now brings me to question, why, if it is bearish, why did it break below this and come back above it? That's interesting, right? So if you look at that, let me just remove all of these drawings here. All right. If we look at that, why would it break this only to come back above it, right? Let's go higher. On the weekly, if you look at it logically, actually from here, 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 it's actually still bullish. If we go even higher, interesting, it's actually bullish. I would not consider this to be a bear market. In fact, I think any sell is an induction so that the dealer can actually grab that sell liquidity and then carry the market higher. Because if we're following momentum, the real momentum, in my opinion, which in this case is bullish, I think it makes more sense to look for the buy. Now, you said something, you said on your 1 hour time frame, if I'm not mistaken, you said that it's possible for price to come below here, right? You said it's possible for price to come below here, do something like this, all right, and then go all the way up. Now, if we're thinking about this logically, that actually has a lot of potential, and I'll tell you why. Because it is more so an overall bull market, which means as if what I said is true, in a bull market, any bear move is an induction. What is this? It's an induction. So the fact is, I wouldn't consider this to be the makings of a W pattern per se, but I would consider it to be the makings of a definite possibility of an induction, right? Now, do I think it is possible for it to break this? Absolutely. Why? Because who is induced to enter here? Who's induced to enter the market?
Buyers.
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 But that's the thing. The move, in my opinion, is a buy. So if the move is a buy, then I would think the dealer, the person responsible for actually moving the market, doesn't want to give the buyers the buy. So how does he get rid of the buyers? By selling, by breaking where they would enter. So if we now consider a lot of buyers might be buying even at this low, where would they put their stops? Anywhere, let's be honest, anywhere beneath this area, right?
Exactly.
And if we look to the left, where's a logical place to put our stop loss? So we have an area here. We have this, the price is on that right now. We have this. So I think that's about good. That's about right. Oh, sorry. Let me just undo that. All right, we have, what did I do? Yeah, we have that, which is here. So I think this area in particular might actually have a viability for a liquidity grab. So I'm actually willing to bet or to kind of suggest that I think price can come all the way down here at the very least before actually proceeding back up bullish. Now you said something, all right? You said it's been bearish for, I would say, all of May, right? But overall it's been bullish here from September last year. And then when you zoom out even more, it's even more bullish the further out you go. So I would think, this is just my analysis, but I would think it makes more sense to consider the buy, especially considering nice big red candles on the weekly time frame, suggesting to people that it might sell. I don't know if you're seeing that or not. I don't know what you think, but
I guess I see it. I see what you're saying.
Right. So my thinking is, I think it makes more sense for me logically to consider a buy than it does for me to consider a sell. Now, do I think it could sell short term? I think so, yes. Right? Because in order for it to grab liquidity from this downside, it would probably have to go down. All right? So short term, yeah, I think so. I think we could probably see a move downwards of about 13.
Can I ask you a question?
Absolutely.
Okay, so is this a leave it alone moment?
I think so. I think so. Right? So what I would do is I would wait for a few things to occur in this case. If I am considering a buy, obviously this is a bear market and we know that we trade based on momentum. So if we're trading based on momentum and the momentum is not in our favor right now, automatically it makes it a leave it alone scenario. But that being the case, the question now is prompted, where would I then opt to get in? It's simple. I just need to make sure that my buy is as clear to me as possible. What is suggesting to me that the buy is as clear as possible? So if this is the most recent bear move, I would say anything past the most prominent area, which I would think is this. The most prominent area where price has literally tapped multiple times, right? I would say that, and this, and this, and this. This is probably, in my opinion, the most prominent area, right? and this.
Bro,
and
this is your textbook setup you've been doing forever.
Yeah, it
and
is.
I already know where you're looking, where you're taking profits, or you're trailing tightly at those highs, I'm assuming. And that, it's built into the structure where,
Typically.
price can go right to like
typically.
1.11. Yeah.
Yeah.
I love
So
that.
the idea is above this area, if it can break above this area, because this is the last major liquidity that it would have tapped and then dropped, right? So if it can get back
Right.
up here first and foremost in a pretty reasonable fashion and then break above this, I would then consider it to be bullish again, having grabbed liquidity from the downside, assuming it grabs liquidity from the downside, and then I would say it is then safe to consider the buy above this area. Anywhere above this area, I would say it's safe to consider the buy. Me personally, I would not sell this. I would not try to sell this. I would not try to look for sells. And not saying that you're wrong, but me personally, I think it is more worth it to consider a buy on your USD. What do you think?
Hey, that's convincing. I think we're both, I agree with you. Yeah, because my sell would essentially be a intraday sell if I did sell it.
Right.
And I still am at a leave it alone moment right now. I don't know, I'm gonna coin that because you used to always tell me leave it alone. So I call them leave it alone moment. So right now I'm in the same mode with you, just gonna be reactive. So.
Yep. Which is kind of the idea, right? It links right back to what you said, which is to be reactive. Because again, you realize, I could consider taking a buy right here, put my stop loss right where I think it could go, and then just leave it. But that's the problem. The problem is that is being a predictive trader. Now, if we want to be a reactive trader, which is where we pay attention to what the market is doing, and you adapt dynamically to what the market is showing you, then I think you get much better results because obviously the market, I think, and this I might be in the minority here, but each and every single trade, and this is something I recently adopted in the last year or two of my journey as a trader. Each and every single trade will differ from the other. So to say you have a strategy that literally works on every single trade that you take, this is why typically you would get really varied results, because to say that each and every single trade is going to follow this exact strategy is saying that the market is purely mechanical, and we both know that that is incorrect.
Right. The market is dynamic. So that's the whole point of being a dynamic trader. I get it. And that's the whole mindset behind this, is like, make yourself able to adapt and be dynamic with the market, opposed to trying to find some cookie. Like, yes, we're going to have rules and guidelines, but there's no way to get around observing structure, watching what price is doing, and being reactive. I guess you could be a predictive trader, and maybe people do have success with that. But I personally feel, and I agree with you, this is why, I always vibe with you. I feel I believe being reactive gives you a higher probability of success, because you're able to take in live data and process it. Almost like, let's go to my quick sports analogy and I'll pass it over. Like Floyd Mayweather in boxing, in my eyes, the best boxer ever, it was because he let people strike first and he would counter. So it gave him more data to react to, find openings, find weaknesses. And yeah, I love that. I love it.
So a big part of what you just said is, again, yes, you're right. Being a reactive trader allows you to pay attention to live data and then make adjustments. Now, I have a philosophy that a strategy is only as good as the data that you feed it. So if we have another analogy, we think about war, right? We all know about war, and the generals and the captains and whoever, that green room that is always portrayed in movies and TV shows and all of that. They say, well, okay, we're going to attack from here, we're going to attack from there. They can't make those judgment calls until they actually have intel from the field. So they can strategize, but they can only strategize once they have the intel. So it's one thing to be a purely reactive trader, but if you realize that's not what I'm doing, I'm actually both. I'm actually being predictive and allowing myself to be reactive based on what my prediction says. Because if now it breaks and just goes down, because it is just breaking down, I don't have an opportunity because my prediction said that it will go up. But I can't react because it suggested it could go down. So I'm not I'm not just being a reactive trader, I'm being both.
That's why we have to set those bias, use the higher time frame. Like, I went to the daily and you're like, I even go further, and that just gives you more of a view. Like literally it gives you more of a perspective to make your decision.
Correct. Now,
And if you're wrong, you're wrong. But yeah, go ahead.
Go ahead. You go ahead.
No, I'm just saying if you're wrong, you're wrong. But just being like, I'm just picturing that war room, and you get your spy planes that go over and they say, okay, the enemy's coming east in this route. And you already have your game plan. You already got your tanks and your missiles. And then you say, okay, flank them this way. You know what I'm saying? Like,
because you're one step ahead.
Yep. And you're prepared for it, opposed to just saying, oh, they're in the east. What are we going to do? Let's go get some missiles, or let's just shoot missiles to the west. Like, it's more variables to it that allow you to be successful. Yeah.
Absolutely.
I ran with that one.
Absolutely. Now I'll say this for anybody who's watching. Now, if you watched and you got this far in the analysis, congratulations to you, because I can assure you that many traders will not sit and listen to this analysis, because it's not your conventional type of analysis, far less for your conventional type of video. But I'll say this, that there's a very high likelihood that both Alwyn and myself could be right, as well as there's a very high likelihood that both Alwyn and myself can be wrong. But the idea is just to make sure that you do what you feel is right, because that's what it is all about. It's never about who's right and who's wrong, because I can assure you, your teacher or the person who taught you or the person who's guiding you has been wrong, will be wrong, and is always wrong. The question is, are they honest enough to admit that? That's what this show is about. Yeah?
Yeah. And then just to, not to drag it out, but to add on, where you're talking about no two trades alike, basically, that's a good way to look at it, because, you know, every day, maybe you're in your Discord with your mentor and they're posting this, EURUSD buy, but maybe you see sells and you've been doing all your steps. You know, start to stick to your guns on what you see, and just have your own perspective on things. And it's not like, if you do all these needed steps, you do the prep work, all you can do is get better. And every time you start to mess up or you find a flaw, make sure you're journaling and all that good stuff. But then you make adjustments. And the only way you're going to have longevity in this industry is to become your own trader. So yeah, just keep that in mind, what Brandon is saying, y'all. Like, I didn't get why you called it dynamic trader, but now I really get it, for real.
Yep. So, I hope you guys enjoyed. Alwyn, thank you so much for joining us today for the second iteration of Trader Versus. If you have anything to ask Alwyn, I'm sure he will be more than happy to leave his handle in the video description. Alwyn, you have anything to say before we close off?
No, I'm super grateful for you allowing me on the platform, brother. I really, I'm happy you thought to include me in this, and I just want you to know, like, man, I really do appreciate it, and I hope we can I know we make content, but I like this forum too, so maybe we could do this again, like, once a month or
anytime. You said you would. Absolutely. Yeah.
Okay.
Good. So, guys, if you liked the video because you got any value from it at all, be sure to hit the like button. If you never want to miss another episode, we have a lot of guests lined up. I have maybe 2 more episodes to shoot just this week alone. If you never want to miss another video, definitely hit that subscribe button. You know how it goes. If you have any questions for either Alwyn or myself, you can leave a comment in the comment section below, or you can reach out to either of us directly if Alwyn chooses to leave his handle. Other than that, guys, have a great one. See you all in the next episode. Peace out, guys.